Okay, Derek, thanks a lot. In Money Tuesday, if you put any money away for investments or retirement this year, do you have a strategy, or is it more a guessing game for you? This morning, 5 steps to a successful investment plan. Financial planner Stewart Welch joins us today. It's good to see you as always.
Good morning, Rick.
Really and truly, this is something I've noticed when you read a lot of stories out there. People just kind of hodgepodge, just kind of throw the money out there and don't really think about what's happening with it once it gets there.
It's like the proverbial leaf flowing in the wind. You know, they see an idea and they go buy it, or there's a hot tip and their portfolios becomes sort of a hodgepodge of ideas.
And it's intimidating for folks to make those decisions. Where do you put your money?
You know, I think the easy part is to do the buy side. You know, they get excited about an idea and they go buy it. What becomes very hard if you don't have a strategy is the sell side. It's like, when do you sell something?
Okay, you say develop a concise investment strategy. What does that mean?
You should be able to articulate. You should be able to tell. So if somebody said, what is your investment strategy? You should actually be able to tell them what it is. And it's, you know, it can be, what is the percentage that you're going to have in stocks versus bonds? I think one thing's really important is be able to articulate why you buy a stock, what your methodology is, and particularly why you sell it.
And you also need to throw in there, I imagine, too, is why you're doing this in the first place. Why are you putting the money in there? Have an idea.
Rick, you make a really good point, and that is, what is the long-term goal for your investment portfolio? Is it retirement? Is it for saving for a down payment on a home? Is it for college? And all of those goals will have a lot of implications on how you actually structure your portfolio.
You say diversification is still key. It's still
you know, it's so, you've heard it so many times it almost gets boring. But we had a lot of people that in the 2008 banking crisis lost fortunes, particularly here in Birmingham.
Because they put everything in one spot.
They had it concentrated in some of the banks that were based out of Birmingham.
Okay, you also say include a rebalancing strategy. I mean, be able to go back and figure out what's going on and where you need to shift things, right?
Yeah, well, if you have a rebalancing strategy, it forces you on a periodic basis, we would do it at least once a year, it forces you to take profits and turn around and take those profits and put it on securities that you own that have underperformed. And that's under the assumption that you're holding those securities long term and that the dogs of today are going to be the stars of tomorrow.
Also, you say expenses. Keep in mind what those expenses are out there. Commissions, fees, all of those things.
Expenses matter. I was looking at an annuity not too long ago, and the internal expenses annually on the annuity were about 3%. Well, that's a pretty big bogey to overcome on an annual basis in terms of trying to get a return on that.
And quickly, you say invest systematically. What do you mean exactly?
Well, I think one of the keys to being successful is start wherever you are and invest automatically. Invest every week. We had one person that started investing $1 a month, and their goal was to double it every month. And she got so excited about the progress that she made that literally within 3 years she was financially free.
That's great. Okay, Stewart Welch, it's always good to see you. Thanks so much.
Thanks, Rick.
Okay, more to come.